Hello, everyone, and here, Community Lead at Livepeer Foundation, and welcome to Watercooler Chat. This is our weekly conversation where we talk all things Livepeer in terms of network, in terms of governance, in terms of building. So, welcome in, and we appreciate you joining, whether live or in the future. So, some network updates to start with. Last week we had a total fee of 15,746 on the network. We are actually continuing to tick up in the participation rate at 51.3%. And again, that is an all-time high for the last few years. The last time it was this high was in 2022. So thank you to the orchestrators and delegators for making that possible. In addition, because that participation rate is above 50%, the inflation rate is now again decreasing. It's been decreasing for a bit now, and we're starting to see a meaningful decrease in the network inflation rate. So I have two updates, then we'll throw it to Rich. First, the fireside's canceled this week just because of DevConnect and a bunch of people are there. So just to have less noise, we will not be doing a fireside this week. Second, we had feedback from the community that people desired to have unlimited water cooler again. As you know, we had time boxed it to an hour, but folks missed the longer conversations. So I am happy to say that we're going to untime box, and the only limitation will be if it goes over 2 hours, I will probably stop recording. But this can now be open for as long as you guys want and as long as the conversation goes on for. So feel free to meander, to have silly questions, silly topics, whatever you feel you want to bring to the table. That is welcome. It was welcome always, but just wanted to reaffirm that it's always welcome to have people answer questions, to have topics, even if tangentially related to Livepeer. All right, we will throw it to Rich with some updates from DevConnect. Rich, take it away.
Awesome, thank you very much. I'm going to try and turn on video as I am on my phone. See if this works. Okay, that's my face. I'm going to turn it round. Can you see the?
Yes.
Yes, awesome. Cool. So yeah, at DevConnect at the minute, and yeah, the vibe here is fantastic. I don't know whether you saw big announcements this morning around. Let me turn it off now. Around the Kahaku and the private first wallet that is just being released, and yeah, privacy is number one theme and will continue to be this week. It's a lot. A group attended Agents Day today, so big. There's some updates for you, Titan, coming your way. Doug was here. There's myself, Doug, my dad, Nick, Lizzie, and Ben, all on the ground here. And we have a big activation tomorrow, looking at AI and open video. If someone's here, if you could share the link, that would be fantastic. We will be live streaming the introduction, but the primary thing is around actual breakout room discussions. Just a lot of feedback that we've had is that the standard panel format is glad to, well, I think to everyone's glee is slowly dying, and there's more participatory discussion that will be leading in our event tomorrow. So yeah, loads of folks on the ground here. We'll be going to different dinners. Doug's got a couple of investor dinners. I've got a more ecosystem centric dinners, and a load of events this week with everyone from Base to Myosin to Uniswap, for side events as well. So yeah, a lot of people on the ground. And if you have any questions or you have anyone in particular that you would like us to meet, that's something, just send me a DM. For instance, we'll be on the ground with the Ethereum Foundation here as well. So for instance, Titan Phoenix Center that came up, just do send me a DM if you want to speak with anyone in particular, and we can set up some conversations, put face to names. So super excited to be on the ground, and yeah, it's been a great day one of DevConnect over in Buenos Aires.
Amazing. Um, Hope it continues to be a good time, and it sounds like you're gonna get lots of great learnings there. So enjoy. All right.
Yeah, we're going to do we'll do a wrap up at the end of the week. That's going to be led by Joe, who I think I missed off equals on the ground here. So Joe's going to be doing a published a sort of wrap up of key trends, learnings, and everything in between. So yeah, hopefully expect that within the next couple of weeks.
Amazing. Awesome. All right. So the first topic, kind of hot button topic right now, is inflation. So Ben, I will let you. I see. Sorry, I forget the username.
Andrew?
Yeah, Andrew. Thank you. Is
Yeah.
here as well. So I'll throw it to you first, and feel free to take it from there.
Great. Thank you, Anne. Yeah, thanks, everyone. We left an update in the forum. The intention is to give a weekly update. So there is something that I think we'll start to raise today, and I'll let Andrew cover off a little bit more. But something that will also make its way into the forum this week, so maybe getting some mail for a little bit early. Yeah, we've been doing a lot of work in the background, right? We've had discussions with numerous people. We've got a bunch of survey responses. We're starting to build out a good picture of the sentiment. Obviously, we have the historical artifacts around that from the previous inflation discussion, the data that Pixelfield accumulated at the summit, and then complementing that with some similar, but maybe slightly different questions as well around what are the goals, right, as it relates to inflation and its role in our ecosystem. So yeah, that sentiment picture is coming together. I'll let Andrew talk about a number of responses received and the early insights that maybe has. I think one thing that's coming out of that is necessary discussion around ranges. I will let Andrew express that in much clearer terms than I can. But there is often a focus on a particular number, right? At 50% or 51%. Whereas we think actually the nature of a range is a better way for us to be thinking about what it is we're trying to achieve as it relates to goals. So we pick that up in a moment. Andrew can also update on the work that they've been doing in the background about around the model. I think it's getting pretty close to completion, which means that we can start running simulations based on that sentiment and those goals. So really getting to, I guess a point where we can start to bring this back into the open and facilitate the discussions around, what are the different scenarios or options available to us and where there might be consensus amongst the community to move forward with something that obviously gets us trending in the right direction. So yeah, I think that's slated for next week based on our timeline to really start facilitating those discussions. And it feels like we're fully on track to be able to do that. So that's I guess a status update. Andrew, do you want to jump in, sort of expand on that, add some of the color?
Yeah, sure. Thanks for the intro, Ben. Can everyone hear me?
Yes, we can hear you.
Okay,
That's
great.
perfect. Yeah.
Who seem to have surmounted the technical difficulties.
Yay.
Last week. Yeah, so thanks for the intro, Ben. I'll do a quick self-intro too. I'm Andrew. I'm a mathematician. I run through my consultancy, Stuka Research, which does quantitative consulting services for DAOs. Ben's brought me in to look at the inflation issue and basically try to frame it and look at it from different angles, present it in a new way to the community and gather input, and then also do some kinds of mathematical modeling to estimate the impact of various choices of change. So the first thing that I think most of you have seen now is the community survey, which thanks to all of you who filled it out, we got quite a few responses. I think it was at 24 last time I checked, which I think is a good number. As Ben said, one of the main ideas I had from presenting this survey is to try to separate the issue of any specific protocol changes, such as introducing inflation caps and ceilings and floors, or tuning the parameters from the idea of what the community's actual objectives are for token emissions and participation. So in a particular note is we've got this parameter called target bonding rate. Although that thing is called the target, we can step back from that naming a little bit, and we can, it's possible that we want to release ourselves from the idea that that specific number is the community's actual goal. And based on the responses to the surveys, it seems like basically everybody's on board with the idea that there's actually a range of participation rates that would be palatable if we sort of separated the issue from the design of the emissions system for the moment. So based on the results of the survey, I'm expecting to share like a summary of the results. I won't say anything more about it right now. I'm going to write up a summary and share it at the end of the week. And then, yeah, as Ben said, we've been doing some work on the modeling. I can't guarantee the results are going to be ready by the end of the week, but it looks like that's what we're on track to do. That's what my quant says that we are on track to do. So hopefully get some sort of simulations and visualizations out of that soon too. Okay, and I'm here to sort of take any questions and introduce myself to the community. So please go ahead.
Thanks, Anne. Yeah, do you want to see if there's any questions from the community?
Yeah,
Things
I mean,
people want us to
definitely open
expand
up
on?
the floor.
Yeah.
So if anyone wants to chime in with their thoughts or opinions about what we've been seeing so far, feel free. I definitely have some perspectives I drop, but I'll let other folks lead who are in the community. Right, maybe I'll shoot a priming question out and see if people want to start there. Silence. What are we feeling like is still the biggest point of confusion or contention when talking about inflation? Like, where are people there? Are we feeling like ready to try something? Are we feeling still confused about certain pieces of what we're talking about? So yeah, tell me where you
are. So I think it's actually it's a pretty complex topic, and if you even read through the original thread that Dob posted when he introduced the proposal with the LIP 100 with the inflation ceiling, you can see from the variety of different perspectives people took in the responses that there's sort of many conflicting things going on, and it's quite difficult to like balance one objection against another, one comment against another, see which one is more, which one has the bigger impact, basically. So I wouldn't say it's any one particular point of confusion that's happening. There's actually multiple potential points of confusion, and not only confusion, but genuine sort of disagreement about what the objectives could be. That said, I don't want to get too much into summarizing the survey results because, first of all, we haven't closed the survey, and secondly, I haven't done all of the work to dig through it. There's quite a lot of support for the idea that we should bring down inflation, but then also a significant minority making statements against it, and saying that bringing that down is a non-objective. Within the, I guess the part of the survey that was somehow the clearest in terms of like people kind of being more aligned on the responses was what's the range of acceptable participation rates. Although we did get a wide range of numbers, we saw like there's certainly some ranges of numbers within the community responses that are acceptable to almost everybody. But even there, when I asked, there was another question in the survey about why is a low participation rate a bad thing, or also why is a really high participation rate a bad thing. Again, we saw a very diverse range of answers, and several people admitted that they don't know, that they don't have a particular concrete effect they have in mind of a bad low participation rate. So I think there's a lot of room to carry on discussions and explore the different aspects of it in more detail once this initial phase of exploration is over.
Yeah, I can chime in and give it 2 cents as well, if you'd like, Ian.
Oh, please go ahead.
Great. Yeah. So I've been a part of the Livepeer ecosystem since about 2020, and we've brought this up many times in the past around inflation. What does it mean, and how does it affect all the participants? And I would say that. Oh, sorry. Hold on. Am I getting some feedback? 1 second. Okay, I'm back. Okay, so the way I would frame kind of this problem we're having is there's kind of three things that are being kind of addressed without kind of putting them into a box. So the way I see inflation on the network is or at least how I see the problem is kind of like, what are we optimizing for? And so I put them into three buckets. One would be the health of the network slash like customer. So like the end user, like how does inflation help the end customer of the Livepeer network and and the network as well. The second is the health of the token, right? So the token, the LPT token itself. And then the third is like the health of the orchestrator. And I actually think there's like three different answers to each of those um, solutions. And so I'll kind of quickly go through. I just kind of jotted them down. So I would say like, and this is all my opinion, right? So this is not explaining other people's opinions. This is not the consensus of the community over the last 4 years. This is just Titan's opinion. So like the health of the network is kind of like this idea that the end customer should be getting the best orchestrator possible, right? So the customer really wants fast, reliable services from the network. And so what does it look like? How does LPT affect that? One problem we have is we have like all this stagnant LPT that's delegated to bad orchestrators. And what I'll digress, maybe inactive orchestrators or orchestrators that are just dormant. One being exchanges for that matter. And so like, you know, what would make a healthy network is if we actually had more delegators switching to orchestrators that were more active, right? And so this idea of like not having just passive delegation being like in the network. So like right now we're there's a metric on the dashboard that's like how many delegators do we have, and we always want that to trend up. But it's like if they're just dormant and they're staked to orchestrators that aren't doing anything, they're not actually helping the health of the network and the end customer in that sense, right? So in that case, you would actually want like a lower like we don't need 50% participation. Let's just bring it down to 10% participation, and let's have those 10% of delegators actively moving stake every time something happens, right? Like oh, Titan is been offline for 1 year. Like, okay, we're gonna move away. Or Titan is really pushing for some 402 upgrades, and that's really promising. Like, let's give him some more, right? So, like, kind of like these dormant, like, you know, stakers don't actually help the network health, right? So that's like one area you can go, and a solution to that would be every year delegators have to restake, right? So you get automatically undelegated after 1 year, and then like that makes like the network so much more healthy in the sense of like and it's tough because Papa Bear is not with us anymore, but two of his nodes are taking up the 200 spots, right? So it's like how does that affect network health, right? So like lower delegation participation and higher activation from the delegators would be one way to look at network health. Okay, so that's one box. The second box is like token health, right? So tokenomics, token price, what does the investor see? What does retail see, right? They see number go down, project dead, right? Like the number go down, this is bad. Number go up, things are good, right? So like token health, pretty simple, lower inflation, better optics, right? So we have naturally really high inflation because of how it's programmed in. Like, let's just chop that down to like 3 to 5% or 8%, and like, you know, token less inflation, number go up, good, right? So like that's the health of the token, right? Would be lower inflation. And then the third is like orchestrator health, which is like very few orchestrators earn enough in natural demand to justify their operations. And so like uh what has kept the orchestrators alive is high inflation, right? Like that's what's kept the participants in the network to supply demand, or supply I should say. And so like higher inflation is good in that sense, right? So that's the opposite of maybe token price. And so I think there's just like three categories of like, how do we adjust the participation? But it's really just like, what is the outcome we actually want as a community, right? And so those are kind of my three buckets that I put them in. So one is like, low inflation, you know, high inflation. And then one is like, let's have delegators actually do the delegation. Like, let's actually like unstake them after a year and get them to reorganize the stake and make the network healthy that way. So, sorry, long rant, kind of just my 2 cents, and people can push back on that. I'm open to discuss.
A follow-up question for you, Titan. Um, who do you think is the most important stakeholder of the three buckets you mentioned in your mind?
Who is the most important stakeholder? Um, well, that's a great question. And if I were to run a business, I would say that the customer is always the most important, right? So how what is, how do we as a network provide something that is really 10x better than anything else that anyone has ever seen, right? And so like, you know, what would cause that to happen? I don't know. Is that really like a like but like orchestrators are an important stakeholder, and delegators are important, and it's like, I don't know who's the most important. I mean, the customer's always right. So like, what does the customer want, right? What does the end user want? And the end user wants fast, reliable services at the best possible prices, right? And so like, you know
Yes.
i I think the selection algorithm has gone a long way to like, all these like fallovers and stuff, but like, um I don't know. Like, customer's always right. Second is like supply, orchestrators that are supplying the stuff. And then the third is like this investor role, this delegator role that's like could have an active part of the community, but also it should be, they like to, investors are typically passive. So they don't want to, they want to, us to do the work while they sit back and kind of collect rewards for having faith. I don't know, but I mean, the customer
Yeah.
is always the most important. So that's just my opinion.
I won't jump in because I actually agree. Right? Like, what is the number one thing? I think it is that, yeah, a customer uh, is utilizing the best nodes on the network, right, to get the best service, and therefore, wants to continue using the network. So to me, I think that is very important, and I really like the mental model or the framing. I think there's sort of like one slightly problematic part of it at times, right? Is that it sort of separates in a way where we think we have to do everything at once, which to me is like part of the problem with this conversation often. And when I say often, right, I don't just mean in Livepeer, I just mean more broadly, right? As it relates to governance, you make one decision, right? And it sort of, can have secondary effects, or people worry about ancillary concerns and externalities and that sort of stuff. So I do think the three elements of that mental model are great. I think to Andrew's point earlier, and he might want to jump in and explain this better than myself, is this is why ranges is like a more interesting way for us to think about this, right? Because there is a range of participation which can meet the needs of the health of all three of those, right? And when we sort of choose, hey, what's the primary stakeholder or what's the number we're going for, we miss the fact that actually there's a range of numbers that can meet all of those needs. And as long as we have clear parameters and understand how that's tuned or how it works within that range, we can have this confluence of wants come together and allow us to achieve all of the goals in unison without having to add additional factors into the stuff we're trying to take here, which is actually worth inflation. So I think this is like a good way to introduce the fact that what we're trying to do is find the overlap there and find a number that supports us to achieve all of those goals without having to take additional action right here, right now, but not precluding us from taking those additional actions, because I think driving quality on the network, right, and having stake moving and delegated to the highest performing orchestrators is key and fundamental. But that's not sort of part of the inflation discussion necessarily right now, or the primary goal of what we're trying to do here. Andrew, do you want to jump in and express your thoughts on that? Because I'm sure you get some interesting perspective.
Yeah, sure. So I was. That's a really nice framing, Titan, from of splitting it, the network sort of participants into three categories: sort of demand, supply, and capital side is how I would usually frame that. Within the scope of what we're looking at now, to put it in that framework, first of all, we're looking this idea of separating passive orchestrators from active ones, and redelegation is sort of been floated a lot, and I think there's certainly some community members have appetite for exploring that. Currently, we're not exploring that. We're just trying to isolate the pure issue of whether inflation is too high, and within the framework, I guess naively it looks like it's a trade-off between protecting the investors, the token health, versus protecting the orchestrators, right? We're currently diluting LPT investors to give the extra tokens to support orchestrators, and then the question is, what is the right level to do that at? So there's basically two reasons. There's two core reasons we saw that among the community that people might want to bring down the yield, bring down the inflation. One is to do with negative perceptions of projects with very high yields as being sort of high risk, short-term investments. And then that's certainly a trade-off of sort of LPT investors seeing a number that looks like a bad project, basically, a very high percentage yield, and not wanting to jump in versus supporting the orchestrators. But there's also an element of the network in there as well, because the other reason is that while we're diluting investors to, and this is something that we haven't, this kind of goes beyond the scope of the current survey and the current exploration, while we're diluting investors to hand the token to orchestrators kind of across the board, is there something that's like a really big capital stream? Is there something else we could be doing to grow the network with that funds? And one of the things, is, for example, the idea of diverting coins more to remissions more towards active orchestrators than passive orchestrators. Then there's also ideas around, could those tokens be diverted instead to build it, working on projects, basically grant programs, protocol development, that kind of thing. So although it's ostensibly just a sort of a trade-off between orchestrator health and token health, there's actually, I think, an element of network health in there as well if you take a sort of longer term growth view.
Well, I will caveat a bit though that like the inflation adjustment probably won't affect like network or customer health probably at all, right? Like this really is just about token optics and orchestrator health, because right now we have more supply than demand, and we've always had more supply than demand. And really, um, i- i- Livepeer not hitting product market fit or gaining mass adoption is not likely because of our supply of GPUs. It's more likely because of you know, like ease of use, front end gateways, targeted customers, right? Like all these like go to market strategy things that we haven't that the network has a hard time doing because we're not web 2 facing, right? So yeah, I mean, I think this discussion or this and like you said, the the topic is around, it's bad for optics that the inflation on the network is so high, people lose trust in it, right? It's like, yeah, that's exactly a stake side, a capital formation, a retail investor side of things. I will say though, just to caveat the point again, a point though too is, um, running the startup grant, I will say that like a lot of orchestrators have joined because of the high rewards, right? They kind of see how much they can earn in rewards compared to other networks, and so they do come to this network. So while retail might be shied away, orchestrators are pretty attracted to that. So it's definitely a balance.
Yeah, so but I would while the scope of what we're looking at is purely about what's the number for inflation, I would agree that this is not doing anything for network health. That's more an adjacent conversation that we could have sort of next. Then on the startup grant stuff, I guess a question which I don't expect anyone to answer right now, but maybe people ought to be thinking about is if high inflation is attracting people to run orchestrators and participate in programs, then how high does the number need to be for that effect to happen? It is making the number even higher going to attract more orchestrators, or is there a threshold at which point it's already the best in the market and people are already interested, and it's diminishing returns after that?
Well, when I got into the network, we were on the forecasted yield on the front page was 20%. I'm just looking at it right now. It's at 65%. And 20% was well enough to get people excited and involved. So I would say, even just from my time being here, we're at least 3 times over what would be a minimum viable to get excitement for people to join. Just off my kind of experience.
I think another thread to pull out, and I'm curious if people think about this, is the conversation around delegators. Um, as someone who's been in the industry for a while, I delegate to a ton of projects, and I guess to highlight the point, there are very, very few projects in which I have been an active delegator, right? And I would say I'm less of a retail investor type. I'm more interested in like, what's the PMF of the project? What is the project trying to do, right? More like I would say informed, quote unquote. My analysis often is, okay, wow, there's projects doing some cool things around, I don't know, let's just say it's decentralized video or, real-time video AI for the case of us. Let me delegate, and then I never go back. Not because I don't want to, but because I am like, well, I already did what I felt was necessary, right? I believe in this project, to your point about Belief Titan. I believe in the project. I think it's going to be cool. I want to support them. So the issue with delegation is that there's a very low conversion rate between what I'll say is a passive delegator to an active delegator. We have a number of active delegators in the community, but the percent of people who go from passive to active is very low, and that's not just us, that's across the industry. So I'm curious what people think about delegators in the whole equation.
sorry. And did you have? Sorry, I kind of missed that. Is there a question or something you had?
I was
I'm
just
just looking at
curious.
previous comments that I'd like to go over. But yeah, what did you leave off with?
Oh, I was just offering that. You can go to other things, but I was just saying if people have thoughts about how delegators play into the equation of what we're talking about. But if you have other things you want to jump back to, feel free.
Yeah, I would say like delegators are pretty much MIA in most of these calls and most of the stuff. But yeah, I'd like to kind of go through some of the comments that I highlighted in the chat and just give some 2 cents on what I think. But obviously, other people are free to jump in. Actually, uh, uh, what was that one? Oh yeah, Mike says, how much of the feedback? Actually, this is a question to the foundation. How much of the feedback for is of the inflation discussion, specifically probably the forum, are from orcs, delegators, or
Oh, did we lose you, Titan?
Hey, I think I
I
dropped
think
out for a second.
we lost him.
Yeah.
Yeah.
The question was how Titan's question was what was the breakdown of roles among people who answered the form? Is that right?
yes, that's correct.
Yes.
Yes, we had nearly everybody. So people could take multiple roles. So there's some overlap, but we had nearly everybody who responded as orchestrator, and then about half ticked delegator. So obviously, some people take both orchestrator and delegator, and I haven't yet sifted through to see what the roles of people who are not running orchestrators are. So don't have an answer for you that.
I'm very curious as to because like I was even confused by that because I'm an orchestrator, but I'm also a delegator. Like obviously I have tokens, right? So and naturally you get tokens as a orchestrator. So I'm curious as to how many people typed delegator without typing orchestrator, and then of that, like how many of those are app builders or how many people are actually builders of any kind. So
So we had two people write builder or developer, and then there were two people who wrote core team member, basically.
Right.
But I didn't check. I haven't been through yet to check whether they were the ones that did not write orchestrator.
Cool. Okay, so I would say there's some bias in that because most orchestrators are, trying to navigate, and they're the most active. So that's interesting. But yeah, that was Mike's comment, so I just wanted to highlight that. So it's interesting. Another comment from Mike was Titan, wouldn't slashing or for inactive or poor performing orcs be a better approach than to auto unstaking? Yeah, I mean, slashing is a real, it's in the white paper. I think it's in there as for like, incorrectly or maliciously doing stuff. But yeah, could there be slashing involved in the Livepeer network? Like, of course. I think slashing is optically really scary. Auto unstaking is like way less scary, so you can still encourage people. Like if I when I go to Eigenlayer and they're like, "Oh, you're slashing if you pick a bad node," and I get freaked out. I'm like, "Yo, like how much slashing?" Like I get scared, right?
Well, I was talking more about slashing the orchestrator's cut more than the delegator's cut. Like if the orchestrator's poor performing, take their tokens away, right? Because they're the ones that are, doing whatever harm that we may think they're doing, right? So not necessarily slashing the delegator portion, just eliminating the orcs portion of the reward if they're poor performing or inactive, and then it would take away a lot of the incentive for them just to sit idle and do nothing.
Yeah. As much as I love the idea, as you and I both know, Mike, talking about this for years. Like, who gets to decide performance, right? So it's like a
Yes.
yes, yeah,
That is a very difficult topic. I mean, we continue to have conversations. Even the Cloud SPE is, still engaging in conversations on the proper way to assess orchestrator performance and validate their work. So that's going to be a topic that I think will hit harder when we start to look at how do we assess these poor performer or these what we were calling vampire nodes. I think those people definitely need to be purged out of the system in some way, shape, or form. But I don't have an answer yet, but it's going to end up being how do we do that assessment?
yeah. No, we've been having this discussion for years, so that's a tough one. But even then, like regardless if they're vampire or being malicious or not, like we do have Papa Bear's 2 nodes taking up 2 spots, and unfortunately he's not with us anymore. And so like how is that affecting the health of the network and the customer when they don't have, his amazing whatever it was 5 or 7 gigabit internet to his like stacks of 5090, like he was always just so into it. And the network he isn't supplying that anymore, and the network needs to make room for someone new. And he's kind of stuck in that position. And so how does the network deal with that, right? So like auto unstaking could be that, like, or like you say, slashing. But the problem is slashing requires performance based kind of metrics from some sort of trusted party or some sort of thing that we can't um, necessarily measure. Whereas auto unstaking is there is no performant measure. There is um, no authority on it. It literally is just like, it might be annoying for people and they might not like that, but it just gives like an opportunity for delegators to like maybe you get some bonus delegation if you get auto unstaked, and then like the next time you delegate to someone you get bonus because you're taking the time to look. I don't know, this is all just coming off the dome, so it's probably not a good idea. But yeah, just some like interesting comparisons between like network health and token health, because network health would look something more like, let's not encourage 50% of the participation, let's go to 10% of the participation, and that 10% is super active in like moving stake around relatively. And so when Mike does something impressive and he buys a whole tower of GPUs and puts it on the network and has them at 100% uptime, like delegators know that, and then they switch to him, and he gets rewarded proportionally in the network. But if 10% are that active, which is probably not even that much, there's like this 40% of just stagnant farmers or stagnant stakers that are just stuck with orchestrators that aren't doing anything, right? And so like like if that were the case, then let's reduce the participation rate down to 10%, and let's just cram down that inflation. It looks good for the tokens, but it also it encourages people that are not in it like doing their job to like unstake. Like we don't need just people staking just to stake, right? That's not actually network health, right? So that's an interesting concept, right? Yeah, another one was from Marco, which is Marco says most investors aren't supporting orchestrators, they're just yield farming, and inflation goes to delegators mostly. Orchestrators take a small part, which is true. Yeah, I mean delegators definitely get a vast majority of the inflation, um, and orchestrators take a much smaller cut. So it is funny that the people that are getting like 95% of the inflation
Mm-hmm.
are getting have very very little say into how the network inflation works, right? And then the people that take probably the smallest part, I think on average orchestrators take like 5% on an average. Then you would say that all of them are steering the network, right? So maybe that's how it's supposed to work. I don't know. It's just interesting. Um, Yeah, let's see. Ben says, what percentage of delegated stake is held by orchestrators? We should not pretend they are not highly interlinked. What percentage delegated stake is held by orchestrators? I don't know.
Yeah,
Yeah, go ahead.
maybe I could just jump in. Yeah. I think it's just important, right, to uh, not be making this like one uh, verse one, right? Like it's not a zero sum situation. I think it's really important to think about the fact that we can achieve the goals of numerous parties, right? By a good understanding of the fact that yes, there are different needs, but actually, there is a confluence of things together. So, I don't want that sort of question to be misinterpreted, right? As me suggesting that orchestrators really, are most of the delegated stake in the network, right? It's more just to say that actually we need to be considerate of the fact that let's be real, 100% of orchestrators are delegators as well. Yep. And therefore there is a confluence of their needs on both sides of that equation that makes a range or a set of numbers palatable to achieve both of those goals concurrently.
Right. Yeah, I mean, orchestrators probably are a pretty small percentage of delegated stake, right? They're probably I don't know. I can't make a, based on personal heuristics and onboarding something like 22 orchestrators over the last 5 years. I would say somewhere around 5% of delegation is, 5% of delegation is orchestrators, something like that, right? Yeah. So I would say and that it goes in line with the inflation as well, which is 95% of inflation goes to delegators, and so those are usually passive people. So yeah, just my heuristic. What else? Jason says, I think currently we should focus to accelerate the rate of change than ceiling and floor, as that's the lowest hanging fruit to situate us into a better position without having to go through multi-year smart contract audit and implementation. Right. From my understanding, Jason, what you're saying is the ceiling and the floor. There is no ceiling and floor, I think, right, in the current smart contract. It's really just a rate of change that is already in the smart contract, if I'm not mistaken.
That's right. It's the rate of change and the target participation rate are the two parameters.
Yes. Yeah. So a ceiling and a floor would require a whole new audit. So that's yes, I think, Jason, I agree that that would probably be too much work to implement a floor and a ceiling. Marco says, I don't know, but it's a 200,000 market cap and most orchestrators aren't millionaires. I'd be surprised if it's more than 10%. Yeah, I think that was in reply to someone else. But yeah, it's again, orchestrators are mostly technical and are in this to earn the extra income. Most people with this much capital probably wouldn't put the effort into running an orchestrator, right? They'd probably either delegate or just go elsewhere. Yeah. Oh boy, there's lots of comments. And do you want? Let's see.
I think maybe because folks are we're having the classic. We're talking and then also we're having conversations in the chat, which is fine. I think and just an observation that I wanted to offer to everybody is when we have these conversations, because the initial kind of topic was inflation, and we expand out into a lot of the kind of parameters of the network, and everything's relevant. But I think that that's part of where we currently are. I think we're still trying to understand, how do all these factors connect to each other. So I think what makes it challenging when we want to talk just about inflation is we haven't had enough conversations about how all the factors impact each other and what are the most important factors for us as a network and community. So one thread to pull out is we've been mentioning how ultimately is participation rate materially important, right? Does it actually, if we have it at 10%, like you're suggesting, Titan, or 90%, no one suggested that, but just hypothetically, what materially is that impacting? And I think the answer to that question is, well, what do we want to impact? And to your point, Titan, if we have a lower rate, that would ensure that potentially we have, and let's say we do you have to delegate every year, right? Redelegate every year. That would ensure an active delegator community. Is that what we want? Open question. But I think fundamentally the participation rate is not is a tool like Josh mentioned rather than rather than something else. So it's a tool, right? And what tools are used to do things. So what do we want to use that tool for? Is the question, and I think that's why we kind of expand out in the conversation, because we're trying to figure out, well, how do we use this tool and to what end do we use it? And I think that is why this is a complicated conversation, because we haven't really aligned on that piece of it yet, from a community perspective. So I know, maybe Ben and Andrew, this is like expanding outside of your initial kind of ask about what do we think about inflation, but I think in a way this is actually answering the question, in kind of not answer, but it's answering it in the sense of, I think we're in a place still trying to figure out how do we use that tool, and is it the most important thing to care about the optics from a retail perspective? That to me is seeming to be of lower priority. And what's seeming to be his higher priority is, how do we make the network function better?
It's just for me not it's an and question, right?
You said an
we can
end
do
question?
both. No,
Oh.
it's and,
Oh,
right?
and
Yeah, like we can walk and chew gum at the same time. I guess the nature of this conversation is excellent, right? Like, I think it's great. I wholly agree that we need to have these types of discussions, right? And I love being on water coolers like this, right? Where we really talk to each other, right? Given we're all owners of the ecosystem, about what are its goals, what are its values, what is it that we're trying to achieve. I think these are excellent discussions. But as it relates to like inflation, right? It can expand the scope out, right? Which causes anxiety and makes us think that we can't just take action on one thing, right? And to me, the starting point for this is basically everyone sort of thinks that inflation can come down a bit right now, right? And is trying to figure out like what are the numbers that they're comfortable with. And I think that's what we're trying to do here is illuminate the fact that, hey, we can take some action here, and through the nature of these discussions, the clarity around the goals, also be identifying additional things, that can help improve the overall health of the network. So, I think this is an excellent discussion. It's a huge help to me and Andrew. But I hope it's not something that makes us think we have to answer 10 sort of questions before we can start to take some action on inflation, because I think mostly, right, we think we can start to trend the number in the right direction, by utilizing the parameters that we already have. And through that act, be identifying, all right, what else is it that we want to do and need to do to have well-balanced health across the broad section of stakeholders as well. So anyway, I think this has been absolutely great. And we're excited for next week, right, when we can come back, share some ideas around, what is the sentiment of the community based on the survey, and then what are some potential scenarios that we think the community could be discussing, to get some action on this and start moving forward.
And would you say the core problem is the optics in the crypto community about a high inflation rate? Is that the core problem, or is there something I'm missing? I'm no tokenomics expert, but if I had some more clarity about the actual problem and what the end goal was, maybe I would have more to say or more to add to the conversation. I just feel like I don't really understand what the problem is. Again, are we trying not to be the shit coin? I mean, is that what we're trying to do? Is there some other driver here for this discussion?
I think Andrew, right, can probably talk about what the community thinks the main goal here is, right, because that is what we're focused on. But if I go back to the capital markets board, right, this is a key part of it, Mike. Yeah, when the capital markets board met, right, and discussed this being a priority action, one element of it was the belief that being an outlier as it relates to inflation, right, is not a good perception for the ecosystem over the longer term. And we don't need to solve that overnight. But having a narrative around the fact that we're moving that in the right direction is something that, that body
Okay.
was like looking to achieve for this. Yeah.
I can jump on and make a comment on that too. I would say that based on the going through all of the comments from everybody who thought that we had to bring down, that it was a good idea to bring down inflation, there were two core reasons. One of them was the optics. As you say, it may be off-putting to some investors to see this high yield and assume it's associated with a high risk or a very volatile investment that's suitable only for a short-term strategy. And the second is the question of preserving the capital pool of liquid LPT to potentially use for something else. Right. Currently, Livepeer is eating into that capital pool at a high rate compared to other projects in the industry, and given that the money's still flowing out of that pool, like, couldn't that be used to build out Livepeer? Now, the caveat to that second point is that if the scope of our actions that we're exploring is just about controlling the rate of inflation, that doesn't dig very far into the question of like what else could what else could the money be used for. It's just about the number for the moment. But that's another conversation that could be adjacent.
And I think another important, like, and I heard, Andrew, you also have a degree in math. I just got my second degree in math as well. And I think the other thing that is complex about this, about, like, on-chain tokenomics and models for on-chain tokenomics, is that, like, a lot of this is up to, like, human interpretation, right? So I made a comment in one of the channels in the Orchestrator channel where I was saying you could have 100% participation, and that could mean many different things, right? 100% participation could mean everyone is selling. Yeah, it also could mean everyone wants high yield. Same thing with 0%. It can mean two different things. So it is, Mike, do you have something to say? Sorry.
I was just going to ask another hypothetical question. If demand was 10x or 100x, would we have this conversation about inflation rate? Would it matter at that point? If the demand was so high in which we could see significant or substantial growth in fees year over year or month over month, would this conversation be as pressing or more as important? Or is it the fact that we hit some all-time highs, but it's not like 10x, 5x, 100x. Like, if we actually are generating the demand, does this matter? I think if people are seeing the fees come in, would more people be willing to delegate and participate just because they want to be a part of something that's growing even bigger than what it is? And again, I don't know if anyone has that answer. I'm just curious if anyone has thoughts about that.
Yeah, that's good. This is a good point, Mike. I think that this wraps back around to what you kind of mentioned earlier, which is like, what is the purpose of changing this, and what are we trying to achieve, right? Are we trying to achieve more customers and demand, which shows, ideally we'd have so much demand that network inflation would be a smaller topic, right? But because we have so little demand, it's kind of the largest topic. And so what is the purpose of changing this? Is it just to improve optics so we can be, on life support a little longer? Or is it to, like, actually improve the health of the network so that we can get that demand coming in because we have the healthiest, network possible, right? And so, what is the purpose that we're trying to achieve? And then, like you said, like, if we had way more demand, would this even be a topic of conversation?
Well, that's why when Andrew mentioned about, the second part of it was, leveraging those funds to help build out the network. And I think that's an area where we can start to look at how do we get to 10x, 100x of the demand? And I'm all for that idea. I think having a treasury sitting idle and not, leveraging, I mean, that treasury should be emptied out every so many months. I mean, if we have that kind of velocity with building solutions and building products, Livepeer goes far beyond where it is today. And I don't think a lot of us are even going to be focusing on inflation rate more than we are, trying to keep these customers happy and continue to build out the reliability and scalability of the network. And again, I think I'm more, when I heard part two of his topic, then my ears perked up, because I think that's where it strikes a lot with me, where I want to see that part. If we could actually leverage the funding we have to build out the network more than, worrying about, ape coin versus shit coin versus that coin. But again, I think they're both important. And again, not trying to downplay one or the other, but just my 2 cents.
And
Just from my side, right? I broadly agree, right? And I hope I'm not laboring the point, right? But we can be doing both. And I think this is it, right? I think there's a strong interest from us as well to be looking at how functions are utilized in the ecosystem, um, to support, the various goals we have, building and growing the network. So I think that's an important part of the discussion. I don't want people to think that, we're not prioritizing that as well. The discussion right now is focused on inflation, though. So I think it's good to be trying to rally around something that, it does feel like the consensus view there, without thinking that is at the expense of, our ability to focus on that second question.
I understand. Makes sense. And we definitely can walk and chew gum at the same time.
Yes, and another note for me is that I think these conversations are important. So it is. I don't think that what we're all discussing today is necessarily saying we can't do that, Ben. I think this is more having the discourse around, like, well, where are we? What are we thinking? What do we perceive about these different variables that can be altered on the network? And coming to maybe not consensus on that, but coming to an alignment or understanding about how we all exist here together on the network. And just the plus one, I think if we saw 10x in demand, that's the headline. I think a lot of, because since we're coming from a system of fiat currency, right? A token is only understood as currency usually, but that's not inherently what a token is, right? A token is a metaphor in a way, or on-chain approximation of something, and what that thing is can be valueless or valuable. That is optional, right? You can turn that off and on. You can have a token have no value or a token have value. So I think the issue with a lot of retail investors when they're trying to understand Web3 is that it's not a one-to-one correlation anymore about what a token means and what high inflation means. In our day-to-day life, high inflation is understood as bad, because it is. If you're trying to rely on the Argentinian dollar, I don't know what it's called, if you're trying to rely on it to buy bread and then the value has deflated by 10%, 100%, you're in trouble. But on chain, if inflation is high, there is a different set of why that is and isn't important, and why that's bad and why that's good. So I think that that is the fundamental heart of why we're struggling, is because what are we trying to approximate with the token? What does it mean? Doug has offered his perspective. I think a lot of people today have offered their perspectives. But again, we're in this odd space of it is about value and it isn't about value. And our end customer is our end customer who's paying fees on the network, and that is irrespective of the token in a way. So anyway, I just think I want to make that point clear. So when we think about inflation, don't think about it as in, well, in the US inflation is high right now. That is the wrong mental model of what inflation means in this case. Inflation in this case is more esoteric in a way. it's more, up for interpretation. Go ahead, Andrew. More math, please.
Yeah, well, not exactly math, but I guess I wanted to just point out that your comment about inflation just now actually is perhaps a candid answer to your first question about what's the highest potential cause for confusion.
Right.
The factor of this causing the potential for most confusion, because the two types of the inflation that affects the Argentine currency or the Turkish lira is not the same sense of the word inflation as is being used in Livepeer, right?
Right.
In the case of inflation of a currency, like a traditional currency, what it means is the inflation of prices relative to of regular goods compared to the currency. That is the looked from another perspective, the decline in the value of the currency. Whereas here, the word inflation, as it's used in the is inflation too high discussion, and also the variable that's called inflation in the smart contract implementations, is about the rate at which the currency, the token, is issued. It's actually a completely different concept. Perhaps a word that's like a better analogy with the world of traditional finance would be dilution. It's the rate at which existing fund stakeholders are getting diluted. So I actually tried to steer a little bit away from the word inflation in my survey because of this potential for confusion. But on the other hand, because everybody's in the Livepeer community is calling this thing inflation, you can't really get away from it. So yeah, that is perhaps one of the major points of confusion I've been wondering about.
Yeah. Go ahead, Mike. Sorry, you're saying on mute.
No, I was just going to say, when we talk about diluting it, if you're a part of a bonding manager, the point is to have people continue to stake and stay bonded, and that way they won't be diluted. But if you're not in the pool of delegators, if you're not bonded, only those people unbonded get diluted, right? So it's if and again, that's why I'm surprised the participation rate doesn't go up faster, because folks that are holding LPT on L1 aren't getting the reward. So when these rewards are minted, they're not getting a share of that. So they ultimately are the ones being diluted. So it's in the people's best interest. If you're going to hold LPT, you should be bonded, and that way you won't be diluted, right?
Like,
One would think.
isn't the undelegation being somewhat manipulated by a whale? Like, don't we have a whale like artificially keeping it below 50%?
Well,
I guess
we're
not
currently
artificially, like
above.
implicitly.
I'm not sure about that. If there's a whale manipulating, the inflation rate to keep the rate higher, I don't know.
Because that was always a something like I remember digging into this, like, because this like sitting at 49.5%, we did that for like a year, and we found out it was like Binance at some point. Like I remember, like, I think it was Papa Bear that did it. He's like, look, this is Binance. Like, they just keep dropping it below every time. So like, I think it was like a whale that just isn't even a part of this conversation. Just like, oh, hey, look, if I just keep it at this, we just keep getting more inflation.
Right.
But I digress if it's wrong. But like, from my understanding, that's why we've been sitting like we don't drop down to 40% and then takes forever to get to 50. We always sit at 47 to 49% for the greater part of 3 years, right?
I don't know if it's related, but if you look at the charts on Explorer, you'll see what you're saying. I don't know if there's a person behind it manipulating it, but I definitely have seen in the trends and the charts and the data showing as it gets above 50%, you'll see something cause it to drop, and then it'll slowly creep back up, and then once it gets above, something happens again where the participation drops. So I've seen it happen, what you're describing. I just don't know if there's individual behind it.
I mean, I think the easy answer to this, I mean, it sounds like Papa Bear did it at a time, like some time ago, but we would just have to look at the Explorer and see, is there one address or multiple addresses all timing at they let it be above 50% for a certain amount of time, and then all of them undelegate. So it could be, a simple exploration. If we want to even go back and when it happened in the past, we can, look at the delegation history at that time, at snapshot in time, and then I don't know, maybe some folks at Foundation or maybe in the community can pull that data and visualize it and see if it's, a wallet that's done historically, it's constantly staking and unstaking.
I mean, I think Papa Bear did it on layer 1, so like you'd have to go back to the Ethereum days, but obviously with layer 2, like we have a decent amount of history now that it's easier to maybe we could see. But yeah, that was always a criticism, was like, no, there's somebody that's just like always wants it below 50%, and so is that just a natural market, or is that like what's happening there, right? I don't know. I don't think it matters, but yeah.
And I think, the adversarial perspective, right? If you think of, like, I don't know if it's game theory, it's correct usage here, but if you think about why would somebody want the inflation to be high or the inflation rate to be high, one argument could be rewards, but the other argument could be ownership of the network, right? The longer you're staked and the higher the inflation, the more of a ownership you have of the network. So in a way, high inflation and high inflation and low participation will centralize, will ebb towards centralization. The opposite will be if you have, like, a low or high participation rate and a low inflation, it will ebb towards decentralization. So I think as a community, we need to decide about that. And Vitalik had a great article out about trustlessness of networks in Web3. So it's a opportune time for that conversation as well. Do we want it more? And again, I use this in, like, not a loaded way, but in what it means, a more oligarchic, right, system where there's a few people who kind of have most of the power, or do we want it to be a more decentralized system where it's many small players? And yeah, game theory optimal participants. Excuse me. Thank you, Define. So I think that's a choice, right? We don't have to live in one world or the other. We can live in a medium world, but it definitely is a decision. But it seems like from what we've talked about in the past, we do feel generally as a community that the inflation rate is too high, and it coming down is a positive. But I don't know if we've really dug deep on the fundamentals of why that is or isn't important, because we haven't had, like, extended theoretical conversations about what it all means. So, okay, Titan, thank you for those articles posted.
Yeah, I was just like, this is all just flinging mud at the wall.
You're fine.
Back on layer 1 days, inflation in 2021, inflation, I think network inflation, funny enough, was about 5 to 8%, and then delegator inflation was like 18%. And I remember 18% was like, whoa, like that was crazy, right? Like 18. And then Binance came out and listed LPT, and they're like 59.4% staking with us with LPT. And we were like, wait, what? Like, where are you getting this? Like, people were really confused. And then that's when Papa Bear looked into it, and he's like, oh, they're like artificially keeping it below 50%. So
Right.
this was back on L1. This is very different.
Okay. But I think
yeah.
your point stands, Titan, and it's why I brought up the whole kind of, like, like, if we continue to have high inflation, let's just use the word dilution. Let's say we continue to dilute those who are not staking, right? The power of those who are staked, which is all the orchestrators mostly, and a lot of other people, that will centralize power towards, and I stake as well, full transparency, right? It will centralize power towards us. Oh, Define, sorry we didn't get to your topic. I was thinking we should have done it before this topic, but do you want to go quickly before you have to jump, or or wait till next time?
Sorry, and I have like 5 minutes to give a quick update. I will also post it.
Are people
Here.
good with pausing and letting Define go, and then we can come back to the inflation if we need? How are folks feeling?
can resume. My opinion.
Say again, Titan. Okay, it sounds like you're good to go, Define, and we'll resume after. Go ahead.
Okay, sure. So some updates on what happened the previous week. So we released a tech update. Very briefly, you can now auto-update your images, so you do not need to constantly redeploy. And regarding the pipeline updates, we introduced what we think are very important innovations in the network. With the most important one is that all the workloads that are now produced from our pipeline are trackable and verifiable and auditable. To my knowledge, this is um, a first for the Livepeer network, and this is done through our payments backend, which we have pushed to the repository. Um, you can view here. If you want to have access on this repository on the payments backend, you can just ping me with your email and we will give you access. We will make it open source. We are keeping it closed source um, for a few days so that we verify that there are no security vulnerabilities. The pipeline introduced daily orchestrator workloads. Each orchestrator gets 3 workloads per day, and these workloads will be used to provide the ELO base points that that we will use to distribute workloads, real-time workloads, to the orchestrators. The amount that we pay per workload is also listed. It's about $1.9 per workload at current rates. This also solves the issue that orchestrator had with the previous updates where they weren't able to cover their utility cost after the previous updates. Um, what else? We also published endpoints where you are able to check the workloads that you have received and other relevant data. If you need, if you're a participant and need the API token, just DM me and we will create a token unique to you. I think these are all the updates. Currently, we're building the extension of the pipeline, which will allow us to automatically deploy in all our media channels the daily unique creator workloads so that we can use them for uh, cheap advertisements so that we can make known the capabilities of Embody and of Livepeer. Uh, and we're also working in our real-time app, and then which is not here today is working in some amazing 8K uh, human-like avatars like you have never seen, guys. So very exciting news. Uh, when we have something new, we will show you and we will update on the orchestrator channel once today's update is complete and the unique workloads, the unique content creation workloads are started flowing again to the orchestrators, because yesterday we did the test workloads with the cron job. Any questions? Well, thank you, Peter.
Oh my gosh. Yes, Define, thank you. I mean, so many. You're shipping so fast. So again, always. I mean, you're always shipping fast. So it's not at this point. It's the normal order of things. But congratulations on all the stuff you're getting done. I don't think there's many questions, but yeah, thank you.
Thank you so much, and it's a pleasure to be in the live community, and you guys inspire us massively.
Oh, that means a lot. Okay. Any. Yeah. Seriously, Agent SB is shipping. Well, I guess Embody Network is shipping now, Peter. But yes. So back to inflation, dilution, whatever you prefer to call it. do we have any other thoughts there?
Yeah, I'll bring up a comment here from John. This is another mechanism is a contract based option where after 30 days of failed reward calls, everyone would auto unstake. I actually think that's not a bad idea. If you can't do it in one day or one day in 1 month, like you just consider yourself void and just auto unstake everybody, because maybe it's a bit too harsh, but uh, yeah, we just got some people that are not even calling reward, and yeah, they're just kind of stuck on the network now for the foreseeable future. So
And it might be a good mechanism to even reactivate people, being like, hey, you missed a few calls, like, you still want to be an orchestrator, what are you feeling? So that might be a good way to retain people as well.
yeah, there's that. I guess that would also have to be put into the contract, so that itself is requires a lot of another set of auditing, and the other solution to that would just be like, let's not arbitrarily keep it at 100. Let's increase it to 200, 500, 1000 orchestrators, right? And then that would just kind of slowly solve that problem. But yeah, Rick from the foundation says, what are the metrics that you think will help the Explorer to have stake move more? What are the metrics? I don't know. If anyone wants to jot down their metrics that they'd be interested to see, I think that could help. But yeah, just off the top of my head, what metrics would I want to see? Probably something around the around the orchestrators I would like to delegate with are ones that are active, um, not only doing work, because work is hard, because um, uh, it's like if somebody is in Africa, in the middle of Africa, and willing to accept transcoding work, like they might get less work, but it doesn't mean they're not extremely valuable to the network, because it means that we have coverage in that area of the world, right? And so like this whole performance based ETH paying kind of based is not actually the best metric. Same with like uh, services in one country to another might just be price different, so you know that's not always the best kind of metric for how well they're doing. But a metric would be some sort of like social score of like, no, this person shows up every week. They're actually building. They're actually trying. And then other people that spun up an orchestrator node 3 years ago, turned it on, got 100,000 stake, and then just kind of left. And they just auto call reward and don't do anything else. And they're just getting a ton of stake and they're not really active. And so like how do you manage that? I don't know, some sort of like social pointing score, like like orchestrators can point to somebody that they believe is good, and that could be like a community score that people could look at and go, hey, like interpreter is just killing it, like he's got 5 orchestrators pointing towards him, being like, I'm giving you social score. And then so someone shows up at the front page of the Explorer and is like, okay, we have signaled orchestrators that like are doing well, right? That could be interesting. Yeah, and then that just gives people that like don't want to do more than 5 minutes of research and are long-term stakers, they can just land on there and go, hey, the community trusts this guy, like go for it, right? So there's that. And then lastly, Josh, just to echo what Josh said, my 2 cents, it might help to view inflation as a tool rather than an end itself. There are a lot of things in the ecosystem that can use inflationary token for outside of orchestrator and delegated rewards. I'd start by refilling the treasury with a higher cap and maybe a higher contribution percentage. That will lower the real rate of inflation, what hits wallets. And from there, um, there's a huge slate of things that can be funded to drive demand. the rest of the optics and messaging. If the community perception is that inflation is being used well, then higher than normal numbers look like less of a problem. And Josh got a ton of thumbs ups on his comment. And yeah, so this isn't an inflation topic, but this is around the treasury being difficult to navigate and to ask funds for. It's one of the reasons I and the agent SPE haven't gone back for more funds, is just because it's like just kind of annoying, and the process is a bit cumbersome, and there's not a great path for it. So yeah, that's another comment on inflation, which is like, let's turn the treasury back on and keep filling that thing back up, because that might be might be a good idea. Yeah, anyway, that's kind of all I have to say about inflation, and I'm sure we've beat this topic to death over the years, but here it comes again, rearing its head. And here we go.
I think there's still more to beat. Like I think it's still wiggling. we haven't dealt the fatal blow yet, Titan.
Yeah, the only reason this is just the topic that keeps on giving is just because, like, it's the largest revenue generation for orchestrators and many participants, and so yeah, of course it's gonna keep coming up. Yeah, no, it's an interesting and difficult topic, and we're leading the way, so it's super fun.
Yeah. Any other topics? Yeah, I mean it's a critical conversation. Like I know that it's something we've talked about. My time here as well. It's been of course years. It's been in conversation, but I do think it is. I'll do a quick allegory to something else, and then we do have one more topic. So if no one else has much, I do want to throw it to Phoenix in the last little bit here. But an allegory is how hard this is about the U.S. Constitution. Like constitutional law has been in the news, but regardless, like how hard it is to change foundational documents. So white papers are foundational documents, and it can be scary, uncertain, why fix it if it ain't broken type mentality. And I think networks are no different. The white paper is the foundational doc. So when we discuss trying to change it, there is a lot of like not only emotional but technical overhead of, is that make sense? We want to make sure we think through everything, so it can be a slow going process. And I think that's normal. I think if we were like, let's do it right now, I think that would be like dissonant from the majority of how things usually work. But any other, yeah, exactly, moving intentionally. Any other thoughts on inflation before we pivot to the last topic for today? Okay, we will close that. John said wants to highlight the Mushin Labs update that was posted. So if people want to check out the project updates forum, there is a post in there. Yeah, Phoenix, take away with your topic. Go ahead. Phoenix, are you with us? I'm not sure if that's Phoenix. Right. Well, if can't discuss now, we can always move the topic to next week as well, or to have the conversation in general, if that makes sense too, or in lounge. Probably lounge makes more sense for it. Phoenix is typing. Oh, you had a topic on 402/8004 updates, and seeing if people have been moving on that topic. Pedantic. Okay, Titan, did you have any more updates there?
Okay, hello. Yes. Interpreter says 402, and my honest is pedantic. What does pedantic mean again? Is it just like like a nothing burger? Like
Pedantic means like, okay, these words aren't helpful. It means like kind of like, okay, someone who's overly concerned with minor rules, details, or formalities, to the point of being tedious. Yeah.
yeah. So that's a great.
It's a great
I
word
like
too.
that. Yeah, yeah. It 402 is pedantic because it's essentially like it's a it's kind of a nothing burger because it's like saying like API keys are the new thing, right? Like just replace 402 with like 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 credit like I don't know, like PayPal's the new thing. I don't know. It's just like it's
Oh, did we lose Titan? Sorry.
is just a new way of sending payments between two people. I don't think it's that big of a deal. I think the real big deal comes with 8004, which is the reputation layer for agents and services. And so that is probably the more interest. 402 is just the pay now button. It's the ability to pay. 8004 is the actual reviews, like the Google or Amazon reviews of an agent or a service. And so like when real purchasing decisions come from either agents or people, you can look up on chain like how um how reliable, what kind of service they do, all these kind of things through 8004. It just so happens that 402 is going to be the payment method at which these payments happen. And so because they're on chain, you can verifiably see like, hey, here's a 8004 service that orders pizza and they've actually done like $1 million on chain. And so like, hey, that's interesting. You can see that. But at the same time, like that could be Sybiled, and then you could just send $1 million worth of traffic to yourself, and now you're just like taking people's pizza orders, and you're not actually fulfilling them, and you've won. So it's 402 is not the be all end all. Like it's a standard. 8004 is like an interesting concept that will evolve. And so I've been just really in the deep parts of it, kind of working with Ethereum Foundation. I was the first one to put in a pull request and an issue for Agent Kit Zero. That's what they're calling it, Agent Zero. And yeah, the real question is how does it fit into Livepeer? And so, if you're building like an agent, 8004 and 402, yeah, you should definitely enable them. But how does it work for Livepeer? Like, I think Livepeer is going through a bit of um, a not a crisis, but a mode of like, what are we actually offering to the world? Like, is it transcoding still? Like, is that, or is it like AI work, or is it like what is it that we're kind of advertising as our product? And so, you know, if it is transcoding, like, do agents need transcoding? Like, I don't know. I don't know how that would fit into the world. So it's kind of there's still just a lot of questions as to like how, if, why, when Livepeer fits into that that narrative, because the narrative is very strong with like AI agents right now, and like Livepeer is just on this like I don't know, it's a bit off center, it's a bit off cuff like what we do, right? Um, so yeah, it's just I'm gonna keep my pulse on it and keep an eye on it and slowly kind of enable 402 stuff or 8004 when I can. And, if there's some synergy or if someone has a problem that we can solve, we'll jump in there. But in the meantime, I don't think it's something that, the Livepeer network is going to be on the the bleeding edge as like a product that we're going to be shipping that's 402 enabled right away.
Awesome. Thank you, Titan, for that update. Anything else before we wrap up? And again, I guess a great example of why we need more than an hour to have water cooler, even an hour and a half. We're already at hour 35. So, well, we're back, baby. But I mean, I had a great time, great topics today, and great engagement. So thank you guys for all your thoughts. The more we share, the more further we can get. The further we can get, and the more we can push the network to the next phase. All right. Well, we'll call that a wrap for today. And we will not have a fireside this week due to DevConnect. And we will resume fireside next week. And of course, we'll have water cooler next week on Monday. And there's no longer a time limit. So for however short or long we go, will be what it is. All right, y'all. Have a good one.
Thanks, then.